For me, at least, I still have a core position with my members as long on Bitcoin. But I would actually, if we get to 25, I probably unload that and I probably start looking at turning it into a short for a pullback. People are dreaming and hoping that those good old days come back. But a lot of times, at least historically, that's been a fake out. So for me, honestly, gold has ripped. I ended up unloading my swing trade on gold recently. I actually unloaded it because
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel.
I think it is a sign that there's this positive risk on environment in crypto as well as stocks. In fact, we've seen AMC, GameStop, like all those big stocks that pumped in 2021. They've had big runs recently. Bed Bath Beyond was another one. My only concern is that that's not a healthy thing. When you see a lot of junk coins out there making like 100, 200, 300% runs, that's generally not what you want to see for a healthy market. So to me, that's a sign of caution, right? It's kind of like people are dreaming and hoping that those good old days come back. But a lot of times, at least historically, that's been a fake out. There's a big Fed decision next Wednesday. So February 1st, next Wednesday, the Fed will release their FOMC policy rate decision. The anticipation, what the market's expecting, is a 25 basis point hike. And really, they're generally, if you look at the Fed expectations, it's one more hike after that, probably 25 basis points, and then the market is expecting them to stop hiking. And I think that's why you're seeing some of this risk on environment. It's knowing that the end is in sight for the hikes. I still think the market's misjudging it, though, because it's not just about not hiking. If we're going to stay at 5% interest rates, that's going to be problematic for assets over the longer term. So the market has to now say, okay, well, they're not hiking anymore, but when do they start to cut? And obviously we know that's going to be when the economy weakens substantially, where they'll have to react.
When the money printer goes burr, it brings a little bit more liquidity into the markets. People, have more money to play with. I'm just not, how do you navigate that? The money printer going burr. Does that have a big effect on your trading as well?
Yeah, so in my very short-term trading, not so much, because I'm like in and out so quickly. Like day trades you're in and out in minutes, sometimes seconds. Swing trades, you're in and out in days or weeks. But for me, in my longer term, and again, I basically compartmentalize different sides of my investing, right? I have my day trading, which basically pays my monthly bills. I have my swing trading that builds wealth, and then my longer term, like assets in gold, physical gold, eventually more and more in Bitcoin. That's more of an insurance policy. It's the insurance policy that if the Fed does continue to print down the line, that will protect me, right? That's going to protect my wealth. And so that's where that comes in, where it does concern me on a longer macro basis. And that's why I'll ultimately continue to accumulate Bitcoin if it comes back in, and as well as gold. Everyone wants like the easy, like, oh, this is guaranteed. And then
the flat out answer.
The thing is, what it ends up being is like, if it doesn't happen, then they don't have to blame themselves. They get to blame someone else, which is like, it's like anytime you invest your money, if you're not taking responsibility for that investment, it's just ridiculous, right? Again, you're investing your hard-earned money. You better take responsibility. You better do what you think is going to happen or what you see is going to happen versus listening to anyone, frankly, about those investments. So yeah, I agree. Nothing's guaranteed in the markets, and people need to understand that it's all a probability game. And so when I make my predictions, it's all based on probabilities, which means there's always even at 80% chance of success, that still means 2 out of every 10 times I'm wrong, or 20% of the time it's going to be wrong. And you have to take that into your investing. And the way that I do that, right? So this is really important, is that because I know I could be wrong on any trade, what it does is it keeps me from putting too much money in any one trade. So this way, if it happens to be one of those ones where it doesn't work out, okay, so I take a loss, but it's not a blow my account up loss. And I think that's where people have to get to as investors, to start recognizing that any trade can go against them. So don't put all your account in one trade. It's ridiculous. A retail investor will go to a trade. They'll see a trade that they like. They'll hear about it on Twitter, and they'll say, okay, this is, they're going to focus on how much they're going to make. They're going to be like, oh, I'm going to make 10x. And I see this sometimes on Twitter, like even influencers saying, what's the next 10x trade? What's the next 100x trade? But the real question I ask as a pro is, when I see a good trade setup, I think first, what could I lose if it doesn't work out? How do I maneuver if it doesn't work out? So my mentality and my brain function is switched to where I'm automatically thinking about the defensive side, and then it just keeps me conservative. And so I get in the trade with the right amount of money. And if it's a winner, I stack 100 of those. Eventually I make a lot of wealth. If it's a loser, I'm just losing a small percentage. The greatest analogy for baseball fans out there is like, think about comparing yourself to a home run hitter versus a singles and doubles hitter, right? So in trading, if you're a home run hitter, you're always swinging for the home run. You're always trying to hit it out of the park. You're trying to 10x that money. And what do we know about baseball players? The ones that try to hit home runs all the time, they strike out. Well, in trading, you can't afford to continue to strike out. You can't afford to strike out half the time. That's ridiculous because you blow up your account. So what you want to be is you want to be the Hall of Famer that gets to the Hall of Fame by singles and doubles, like small little wins over and over again, consistency. Sure, you strike out on occasion, but because you're only trying to hit singles and doubles, you only lose a tiny bit. And that's, again, the real way to build wealth. And the reason why I'm at this point in my career, to be fair, right, is that I learned all these lessons, right?
Yes.
I did every stupid thing in the book. When I was younger, I blew up my account multiple times. And so like, it's unfortunately for me, it was like repetitive mess ups that eventually I learned, right? You know, you touch the hot stove a few times, you really say, all right, I better not touch that again. It burns. So again, that's part of it. And then my goal is always to say, if I can cut the learning curve of someone where they don't have to take all the losses I do to get where I am, then that's my goal, right? I mean, obviously everyone's going to take one or two losses or a few losses, but can you limit it so you don't have to keep refilling your account and so forth?
How do you feel about gold right now? I know there's been some movement there.
Yeah, so for me, honestly, gold has ripped. I ended up unloading my swing trade on gold recently. Let me show my chart here. So I actually unloaded it because you're starting to get into some resistance over here. And I actually think that the dollar is starting to hit support or getting very close to support. So for me anyways, I'm going to look to buy gold. So my midterm outlook on gold remains ridiculously rosy. I still think we're going to make new all-time highs this year. We're actually not that far away. Here's your all-time high level up here. But at least for a short-term move, this is overbought now. And so for me, it's like, does it pull back to like this level right here, maybe down to here? At that point, I would start to kind of keep an eye on it and look to rebuy at those points. All right. So for me, I love gold midterm. I just think it's a little bit overbought right now. I wouldn't recommend buyers jumping in now. Wait for it to pull back a little bit, maybe 1850, give or take. And then that's where you start to reallocate some funds to it. So far in 2023, it's lagging Bitcoin because Bitcoin's had such a big move, but it's still, it's had an amazing move since October, I guess from about about 1600 to 1950. So that's a decent percentage move. And especially for something that's known as being a safer asset, it's really returned quite a large number so far.
And speaking of the digital gold Bitcoin, how do you feel about it, being that we were so stagnant, like we were talking about at 17K, and then all of a sudden we just fully recovered from November? It was just like a nice little scoop.
Yeah, it is, right? So you definitely had, you had the FTX drop here, and then this was where it just went to sleep, right? It was just no volatility. This is where you had to exercise patience because, you didn't want to be jumping long or short in here, and it was just chopping people out. But once you got this break up, it was like a melt up. We went right back to the technical. Look at where price consolidated, right? Where it couldn't break through initially, that FTX high. And then it finally did. And we're actually starting to consolidate again. So at least in the near term, there is a chance that we could go up to 25,000 on Bitcoin here before running into some major resistance. The only thing I would dare say is that for me, at least, I still have a core position with my members as long on Bitcoin. But I would actually, if we get to 25, I probably unload that and I probably start looking at turning it into a short for a pullback. I think, so for me, it still doesn't seem like all of the things that I'm seeing in the Bitcoin market right now are not the telltale signs that a bottom is in. For instance, exuberance, like irrational exuberance, people just getting so crazed about Bitcoin when it's only moved up. And again, you could say from the lows, it's moved up, 50%, but really, in the scheme of zooming out on the chart, it is still way down here, but bullish sentiment is scary. It's almost as if we were all the way back to the highs from what I'm seeing on Twitter, at least. So that concerns me a little bit. One of the keynotes of a bear market really being bottomed out is that the first 20, 30, 40, 50% up people are so skeptical and scared that they're not believing it yet. We're not seeing that. We're seeing all this bullish sentiment come back in so quickly, and it does make me a little bit nervous that that's happening. So there's no doubt about it that if you look at the S&P 500, like let's bring up the spiders, the S&P 500, the low pivot on the S&P was in October, right? So, and you've seen generally a trend up from here. And if we go to Bitcoin, Bitcoin's low was kind of right over there too, right at the beginning of November. So you can see that there is a correlation, which does make sense because we know that when the stock market topped out, crypto topped out as well. So it's a risk on, risk off environment. Right now we have a risk on environment. So people are willing to put more money to work in the markets, thinking the lows are in. But it just be aware that if the NASDAQ and the S&P really start to tumble back down, it probably would be tough for crypto to withstand that sell pressure.